All right, hello and welcome to Camel Finance. I'm your boy Camel, and things are getting pretty interesting, right? Especially in the realm of Bitcoin. I'm going to start with a little bit of a conclusion of the week for the traditional finance world. So, I think this is pretty much spot on. I think this is the best thread I've read on CPI. Okay, look, most people are looking at this CPI print and saying it was hotter than expected. I was talking about in my videos this week how I think they've laid a perfect trap. I think a lot of investors and retail could get trapped here, thinking that inflation is going to be sticky and higher for longer is the rhetoric. But in reality, as I was saying this week, this CPI print was cooler than the market and I expected. And here's why. On the surface, headline and core were 0.1 pp higher than year-over-year estimates, but also 0.1 pp higher than month-over-month estimates for headline and in line with month-over-month estimates for core. Headline CPI might look like 0.4% month over month, but in reality, NSA is only 0.2% month over month, which is the second lowest in 2023. So it's even lower than the June print. Core CPI at 0.2 month over month is the same as in August. And most crucially of all, 3 MMA at 0.2%, or said another way, 2.5% annualized, is both in line with the Fed's target and the lowest this year. Yes, you read that right. This is lower than the Fed's current targets. And if you think about it, this makes an awful lot of sense, right? We've been looking at this the whole week, and the whole week this thing has been creeping up, right? This is now sat at 93.8% probability that we're going to see a pause at the November's meeting. And for context, just 1 week ago, these odds were at 72.9%. So let me say that again. A week ago, we were at 72.9% chance of a pause at the November's FOMC. And now 1 week later, we sit at 93.8% probability that the Fed is done hiking. This would not be the case if CPI wasn't just that short-term wobble that I've been talking about and likely going to continue to come off. As I was making the case earlier in the week, despite many still mixing this up, the Fed is not targeting 2% CPI, but core PCE at 2%. CPI is usually running above PCE, and core CPI at 2.5% annualized is consistent with somewhat below 2% core PCE. Here's the best part, something else I've been talking about for a long time over and over again, shelter, right? Shelter being the biggest component that lags the most. If shelter was 0%, both headline and core CPI would be slightly negative month over month. Shelter accounts for over 100% of the month over month CPI gain. Current rent is not 0%, but negative, so both headline and core with real rents are all negative. September's apartment list national rent index was negative 0.5% month over month, which was the lowest September on record. And if shelter was just less of August numbers, headline would be 3.5% year over year and core at 3.9% year over year. So again, the only reason we're seeing this quote unquote sticky or hot inflation print is because shelter is the biggest component and it's also the biggest laggard, as I've been saying over and over again. But as you can see here, this is due to show up in the calculations any month now. Hence, CPI and inflation was way cooler than the market has worked out yet. And this is the case I've been making all week, is that this is a short-term blip that will resolve towards the downside. We will continue to swing from that inflation to deflation pendulum, and thus the trap remains set as everybody and their dog assumes that inflation is sticky, higher for longer is the rhetoric, and the market knows best, right? Okay, charts don't lie, and look at this, 93.8%. We wouldn't be in this situation if higher for longer was really the rhetoric. We also, of course, have this well-known saying that bull markets have to climb a wall of worry. Now, how much more can you throw at the market and yet it still hold up? We've had all of this stuff and more, right? And the bottom line is, these are the times that test you. Are you going to pass the test? Or are you going to do what everyone else does, which is live in this fear state, which is succumb to the news, which is panic sell everything, which is be a doomsayer and remain on the wrong side of the market without a valid technical reason to do so? Data is data, and this is simply data, okay? In all odd years, in the last 22 years, the S&P has made a seasonal August to October low by October 13th at the latest. The last time it bottomed later was in 1999 when it bottomed on October the 18th. This means that the decline in the past 2 days is likely to be the only pullback in this current uptrend. Take a look here. All of these blue vertical lines denote the August to October low timeframes, and you can see what happened thereafter, right? Many weeks of upside rally. It tells us to keep an open mind about that indeed being the weekly cycle low and better than expected outcomes into the end of the year. So we'll do the charts at the end, but hopefully so far you can see things don't look so bad for me personally. And over in the world of Bitcoin, things are starting to get incredibly exciting for me personally. Ferrari has just begun accepting crypto payments for its cars, which is very nice to see. But HSBC is now going to allow customers to settle mortgages and loans in cryptocurrency. So this is massive, massive, massive news, as I'm sure you can appreciate. But it keeps on getting better, because yesterday was the final deadline for the SEC to appeal the court's decision, which found no valid argument to reject a spot Bitcoin ETF. So the deal was, if they did not appeal the court's decision by midnight US time yesterday, then we are essentially guaranteed to see all the spot ETFs approved. Now, I don't know if I agree with essentially guaranteed, but I guess it depends on your time frame, right? I think if we could add in here, we are essentially guaranteed to see the spot ETFs approved by, let's say, mid to late next year, then I think I would agree with this. But things are starting to heat up because the SEC did not plan to appeal the court's decision on the Grayscale Bitcoin ETF. So it seems like they're about to let this thing go. It seems like they're about to let Grayscale convert their Bitcoin trust into a spot Bitcoin ETF. And Grayscale continues to show divergence against the price of Bitcoin. So another green day for Grayscale whilst Bitcoin was in the red. Now, people are very quick to say, yeah, well, Camel, that's just because the discount to NAV is so large that institutions like to play a bit of arbitrage. They like to buy this instead and wait for the price to catch up. Partially, that is probably true, right? We've gone from a 48% discount window to a 16% discount. But I've shown time and time again, okay, I posted this originally, this post here is from the 10th of September. And I said, look, Bitcoin is showing divergence with GBTC price. So GBTC in orange here going up, as you can see, and Bitcoin's price diverging in a downward manner. And I said, look, the last time we saw this was early March, and I pointed it out back then on the channel as well. In orange, GBTC, going up, whilst Bitcoin traded down. And what happened back here, of course, was after this quick divergence, we actually saw Bitcoin snap back and then go on this huge rally to catch up GBTC. So in other words, institutions seem to know something about the direction, and we got a bit of divergence to flush out the retail before the true direction was revealed. So I was making the case around the 10th of September that this was probably going to be a type of repeat of behavior of back here. And fast forward to today, it seems to me like GBTC is thinking about leading, doesn't it? This is GBTC right here on this side, and this is BTC on the left. So right away, you should be able to tell Bitcoin lagging, right? Bitcoin's in here, it's looking for that 60-day cycle low. We'll get to the charts in just a minute, but GBTC is working on a breakout of this horizontal range. So if GBTC can continue to do this, there's absolutely no reason in my mind that we shouldn't expect Bitcoin to find this cycle low, get a strong swing and reversal, and then start making its way up to follow GBTC. So especially given that the SEC has decided to allow GBTC to continue to press on towards that spot Bitcoin ETF, I see no reason why we can't start to get very, very bullish very, very quickly here. The dollar is still a problem child. Here's the dollar basket, the DXY, okay? But is this just breakdown, retest, looking for that resumption lower? Quite possibly. For this to happen, as I keep saying over and over again, we do need to see the euro dollar breakout, and it hasn't done it yet. So far, we've got a failed attempt. So we're going to need to keep an eye on this. But if we can see something like this week, perhaps, then of course the dollar will likely roll over as a result and start to work its way down like my blue squiggle shows. Bitcoin is pretty much behaving exactly how you'd expect it to behave, right? So started to creep up, started to pull back into that cycle low time frame. So any kind of flush, swing and reverse and a break of this downward sloping purple resistance line. And as I've been saying over and over again, I'll get long. I'll also add the Bitcoin proxies like Coinbase, MicroStrategy, Riot and Marathon. And from there, it will be time to see what the market will give into the end of the year. I do personally believe a quick snap to 40 or 42K is on the cards. Something similar to what we saw back here or back here. In fact, if I grab this bars pattern from back here and I move it into play, look, I think something like this or something like this is certainly possible over the next coming days and weeks. I remain optimistic for now. If, however, we find this cycle low and then we come down and undercut and we count this as a failed cycle, then I can start to get very bearish. If, of course, we lose 25K in yellow, then I become very bearish. But all the while we're above this range break, all the while we're finding cycle lows and holding them, then it's malpractice to be bearish. For me and my oil short, I'm going to be keeping a close eye on this going into the week. Now, if this just turns out to be breakdown, retest, and resumption lower, then that's fine. But if we start to recover this upward sloping pink support line here, if we start to move back towards the break-even point on this trade, then I am going to choke this stop down and try to manage the risk a little bit on this trade. There's no point letting this go all the way back into a negative thing. If anything, I think it would be time to move the stop to break even. And then if we do something like this and break down from higher up, we could just re-enter the short on that breakdown higher up. So expect me to move this stop to break even, manage the risk on here. Usually when I talk about moving stops on this channel, I do something like this. And that signifies that I'll move the stop to break even. And then we'll take it from there, right? Gold kind of followed this little arbitrary red squiggle of mine, hasn't it? So this is undeniably a breakout. Now, if we can do something like this, perhaps retest and look for a resumption, I think we can get long here. I think I personally will be interested in getting long, but I might decide to play this instead by the miners, okay? Here is GDX, the senior miners. So you can see, follow this red squiggle quite nicely. And I think if we can get long in here, something like this next week, then we might have a nice trade out of this for gold. I might choose to play this and the junior miners, assuming they can indeed break out. Pretty interesting time for gold. I think we could possibly make some gains going into the end of the year from gold here. I didn't really cover the VIX this week, but if you go back about a week ago, I marked this red arrow and I said that this was not indicative of price, but this was indicative of time, when that time is due for the cycle low to find on the stock market, and thus we would expect the VIX to top around this date. Now, it's pretty interesting because I looked pretty wrong up until Friday's candle, didn't I? And now it kind of seems like maybe we're going to get one more little spike onto Monday's session, and then we can truly see this VIX roll over. So I'll leave this here, but I'm going to be looking for something like this, I think, followed by a reversal and a move down for the VIX. And that will perfectly line up with that cycle low for the stock market, which was marked by this red arrow right here. Moving into the stock market, there's somewhat of a complicated read here. On the one hand, right, if I measure out from here to here, this is a day 34 cycle low, and it seems like it was confirmed given the ferocity of the upside momentum that we saw in the price action over the last week or so. But day 34 is outside the timing window, and actually we would really like to see a day 38 to 42 day cycle low. So I do wonder, I was talking about the whole time we were in this neighborhood, I was talking about, will we get a two drives pattern where we come down, bounce up, counter trend bounce, come down, undercut those lows one last time and form a swing? And if we were to do that, that was the original hypothesis for the trade, right? So was this important to be fluid? Was this important to let the market speak? I think if we did come down and make one more undercut followed by a violent swing and reversal, then I would be open to moving that and counting this to, it would be like a day 41 or 42 day cycle low. And that would actually be inside the timing window versus the current one we have marked, which is outside because it's too early. It's this day 34 or 35, and we want it between 38 and 42. So pretty interesting development here. If we were to see something like this, where we just come down a little bit more on Monday and then start to reverse, then again, we'll stick to the plan and we'll be looking to buy the breakout of this downward sloping red resistance line, assuming we can get it. For now though, a little bit of a skewed read, and we need to see a couple more candles before I can get really confident about knowing exactly what's coming next. It's kind of the same with the NASDAQ, right? So far, objectively speaking, this is rejection at resistance, isn't it? There's no breakout here, so there's no trade yet. So we're still lining it up, and if we break out, then we'll get long, and it will look something like this. And I've had this fractal on the left here for a while because I was trying to show that if we do break out, then I expect something like this to come into the end of the year. But as ever, one day at a time, let's see what the market will give. And this is still kind of following this arbitrary red squiggle, isn't it, for the Dow Jones? So we'll see if we can get a breakout, and if we can, we'll add that, as I was saying. The Russell 2K kind of looking like it wants that two drives undercut pattern. That was exactly what I was expecting to see for the S&P 500, but it hasn't quite shown up yet, as I was saying. So again, we'll see a couple more candles. We're still playing patient. There's no need to be rushing in and out here, and let the market tell me exactly what's going on before I start to make any true decisions. I am very, very, very confident that the read on Bitcoin is correct, meaning once we get a reversal out of Bitcoin and a trend line break at this downward sloping purple resistance line, then it will be time to add the Bitcoin exposure. But the read on the stock market needs a little bit more to be determined. So hopefully by next week, we'll have some positions, we'll have a lot more exposure, and we'll see what the market will give from there. I do still think that we've got a very good chance of running the all-time highs into the end of the year. I'm not in this camp of people that think it's bearish and inflation is sticky and the higher for longer is real, as I've showed you over and over again. So I hope you found value here today. I will try my best to get a members-only video out today, but if not, then expect that tomorrow morning. And until next time, take care from me. All the best. Cheers. Bye.